which is the basic
Yes.
indicator. We were at the lowest, but despite that, we kept the base rate at 8%. Now, we did not want to play with the base rate at least for 3 months so that the whole base rate, is stabilized.
Okay.
I would say to that extent, we have factored some of these things into it.
But will you be raising your deposit costs now anytime soon, since the signal has come from the Reserve Bank?
We need to look at the liquidity in the market now because, ultimately the rate of interest will be decided based on the liquidity available. In case the liquidity tightness continues, probably we'll have to look at increasing the rates of interest on deposits.
What is your sense? There was surplus liquidity until recently. The Reserve Bank has actually continued those liquidity steps. You can borrow 0.5% of your deposit base more from the Reserve Bank. That 0.5% continues. As well, you have that second LAF also continuing. That continues up till July 16th. Are you getting a sense that you will be in the money after July 16th or at least by end July?
Yeah, what would have, what has happened in the last, about 3 weeks or 4 weeks is that a lot of money went out of the system when you had this 3G payments going on and then the advance tax payment, then the broadband money. Now, all this money has to come back to the system. Now, normally this money comes back after 3 to 4 weeks, and this is the time when the money should come back into the system. So that is where the Reserve Bank has taken the steps of continuing this up to 16th of July, hoping that the liquidity will come back into the market by that time.
Yeah. So sitting with these hopes and these calculations at this point in time, is your sense that even if another rate hike comes on July 27th, you will not be in a hurry to increase your deposit rate, since you admit that you will be pretty liquidity surplus by end July?
Yeah, in case the liquidity is in surplus, there is no way a bank can increase the rate of interest because it is ultimately the market forces which operate. So liquidity, if it is available to the desired extent, I don't think that there is a possibility of a rate increase.
What is your sense, going by the manner in which credit offtake has been inching up, 20% already when the last number came from the Reserve Bank, what do you think the credit offtake will be by the time we end September? Do you think that you're going to see a fairly substantial jump? How are the orders or the sanctions looking like?
I think as far as Punjab National Bank is concerned, we are looking forward for maintaining a credit growth of around 22% during the year. And we are in line with this growth as of June. So probably we would be maintaining a similar growth of 22% by September.
Are you getting a sense that going by this act of the Reserve Bank and an expected 25 basis points maybe on July 27th, most of the banks on September 30th may be looking at increasing their base rates?
I think the base rate is ultimately it is an equation. In case the components of the base rates have increased, the base rate has to naturally increase that. I think the options are very limited there, but it is a mathematical calculation.
Yeah, but what I'm asking you therefore is that do you think you will be pushing up your deposit costs by the time September 30th comes?
So deposit cost and base rate, I don't think it operates together. Deposit cost will be increased only if there is no liquidity in the market and then I don't get funds in the market.
Okay.
So the base rate increase will happen depending upon the formula which we have already decided. So both these things for the time being may operate independently.
All right. Mr. Kamath, thank you very much, sir, for joining us. All right, Mr. Kamath, before I let you go, do you see any impact of this signal from the Reserve Bank on the appetite for funds? Do you think some corporates could be scared away?
I don't think. In case somebody has got a project going on a hand, there is no question of somebody getting scared on this.
Okay.
You need to find funds for his project, ongoing project, maybe a little costlier or a little cheaper.
I suppose people will be asking you this question. Will the effective cost of money for me as I am paying an EMI, do you see it going up shortly? Would you see my EMI or for that matter, the lending rate for any of your SME borrowers going up by say August or September? Very soon, do you see the interest rates hitting the borrower?
I don't think up to September, I don't think that the borrower should worry on this. I think we should be in a position to continue with the existing rates itself.
All right. Mr. Kamath, thanks a lot for joining us. All right. Now, that's a very important reassurance coming from a big man in the banking system, the second biggest bank, as far as public sector banks are concerned. And in fact, I think in terms of deposits, PNB today is even bigger than ICICI Bank. So when a man of that moving so much of funds over, 2.3 lakh crore, tells you that he doesn't expect lending rates to increase anytime soon, certainly not till September, that's a big reassurance. So perhaps your EMIs will not go up just yet. There are some statements coming from Mr. Bhatt, O.P. Bhatt, the chairman of State Bank of India. We just spoke to the CFO, and he's been speaking to Newswire 18, our sister company. The main message coming from the State Bank of India chairman is that he doesn't expect the government to cut down FY11 borrowing. He also says that a CRR hike is the more effective tool to up interest rates across the board, by which he means that he doesn't expect interest rates to go up just yet. The situation is complex. Don't see interest rates getting impacted till July 27th. Okay, that's a little more careful than Mr. Kamath. Mr. Kamath didn't see interest rates going up till September, but SBI's Bhatt says that he doesn't see interest rates getting impacted till July 27th. So post July 27th, if there is a hike, maybe that could impact your and mine lending rates, your and mine borrowing rates, your and my EMIs. But as of now, that is not expected. So once again, to revise what we have got both from the Reserve Bank and from the banking community, first and foremost, the Reserve Bank has finally increased the reverse repo and the repo rate. The reverse repo is the rate at which it takes excess money from banks. The repo is the rate at which it lends money to banks when they need for an overnight tenor. Both those rates have been increased by 0.25%. At the moment, banks are borrowing a lot of money from the Reserve Bank. They were borrowing it at 5.25%. Come Monday, they will start borrowing it at 5.5%. When the overnight rate goes up, it immediately has an impact on all the rates. 1 month rate, 1 year rates, 10-year rates. And therefore, you should expect an increase in yields across the board. You must expect that commercial paper and corporate bonds will start having higher yields. The immediate impact will be if you are in a money market mutual fund, the NAV of those funds are likely to fall. So that would be one immediate impact that will hit all of us. The other way, of course, which we will all be impacted will be if our EMIs go up. We have got assurances from two bankers, SBI's O.P. Bhatt saying that he doesn't expect an immediate impact on interest rates and that he would wait till July 27th. The other gentleman who reassured us about the cost of money is Mr. K.R. Kamath, Chairman and Managing Director of Punjab National Bank. He expects that the cost of funds, the EMIs that you and I pay, will not go up till September. Both of them are pointing to liquidity in the situation, liquidity in the market. Liquidity in the market is now tight. Banks are short by about 40,000 crores, but that situation could change. We have another very important person from the loan market joining us, Keki Mistry, the Vice Chairman and Managing Director of HDFC. Mr. Mistry, thanks much. What's your immediate reaction, sir? Do you expect that your rates will start moving up now instead of down?
Not based on what has happened now. Mm-hmm. We have announced a new product today where we've taken into account some increase in borrowing cost. If you see the new product, the first year's rate is fixed at 8.25%, second year's rate is fixed at 9.25%. Mm-hmm. So there is we've taken into account some increase in costs. Mm-hmm. Whenever we announce a product, before we announce a new product, we raise money. So we've already raised money at a certain rate, which will enable us to have the kind of spread we've always done on our loans. So immediately on this particular thing, I don't see interest rates going up. But if this kind of thing continues, then one has to wait and see.